Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 14th, not the 15th of February. We had pretty much an up week for the market, a little bit of weakness in the financials, but they've, needed to see a little bit of profit taking, and the Russell 2000 basically flat. Let's take a look at these charts and make some sense of it. The S&P 500 yesterday closed at a new all-time high. Today it was down 3 pennies, so we're right at all-time highs basically is the way you have to look at this. We broke this little downtrend line here, that pattern we had been talking about for the last couple of weeks of these lower highs, but we were showing higher lows, so it broke this triangle. Now, the upside objective of this would be the height of the pattern from the midpoint. So basically from about here, which is, let's just call it 597 to 607, let's call it. So 10 points from the breakout point, indicating a potential upward move to about $617. Doesn't mean it's going to go there, that it has to go there or it will go there immediately. What I'd really like to see is maybe Monday we get something to freak people out a little bit, as we've seen on several, two of the last Mondays, and then make a higher low and then be able to push higher. That would be the best lowest risk way for the S&P 500 to move higher. Otherwise, you've got to be impressed. This was the gap lower on the CPI this week, and the market held above that. Let's put an anchor on that, and you can see that that now makes this level in here at about 605 the key level. So I'd like to see a pullback that holds above that 605 level, and then the buy strength away from it would be the right way to get involved in the S&P 500. For the NASDAQ, we are at a new all-time closing high here today. So is that true actually? Let's see. This day it closed at 538.17. So we closed 2 pennies off of that all-time high, just 2 pennies short of the all-time closing high. But still, we broke this downtrend line. The energy had been building with these higher lows, and the market has been quite resilient. Each of these gaps lower, the DeepSeek gap, the tariffs gap, the CPI gap, have all been bought into, and that shows a resilient market. Here we are on a Friday going out 2 pennies away from the all-time high in the NASDAQ, 3 pennies from the all-time high in the S&P 500. It's hard to be bearish. It's you look at this and say all this volatility that we saw here, we weren't calling it distribution. I was a little bit concerned that maybe volatility peaks at a turning point, but when in doubt and the market is turning sideways, what you want to do is you want to look to the longer term time frame and say the longer term time frame is more likely to prevail than it is to reverse. And on this weekly chart of the NASDAQ rather, we see a rising 20-week, 31-week, and 42-week moving average, essentially the 100-day, 150-day, and 200-day moving averages. Same exact story for the S&P 500. It was getting a little bit, just a little bit uncertain in there, but we remain above all those key moving averages on a weekly basis. We closed at an all-time high for the S&P 500. So when you back it up, when you see uncertainty on a shorter term time frame, the best bet is to back it up to the longer term time frame and look and see what you have there. Is it likely that this is reversing? It doesn't appear to be. So that's the key to remember. When we look at the Russell 2000, what do we see here? We see all these moving averages rising, and ideally that would mean that we're holding up, but we broke this pattern of higher highs and higher lows, these boxes going up, and now we're kind of turning sideways. So when we look at it, and again, just to refresh if anyone's not familiar, on the left is the daily time frame. On here I have that red 20-day moving average. The blue is the 50-day moving average. The thick blue line here is the year-to-date anchored volume-weighted average price, and the orange is the anchored volume-weighted average price from the election. And what do we see? We see a big mess in this range, and it's consolidating between these moving averages and these VWAPs, but is basically doing nothing. In order for this market to really get going to the upside, it's going to need to clear this level, and it's going to need to do it in a way that gives us confidence. By that I mean we don't just buy breakouts because it's breaking out. You have to ask yourself, how did it get there? And when a market gets extended, then breaks out, it often sees profit taking like it has here. So I wouldn't want to see the Russell 2000 break out here and then buy it. I'd rather see it do this, come back down, maybe find buyers along this 50-day moving average and the 20-day moving average, carve out a higher low, and then be a buyer of strength right in here with a stop underneath this consolidation low. Right now, that's thinking 3-4 steps ahead because we need 1 and 2 steps to clear up first, and that doesn't look likely. And 1 and 2 steps meaning that we need to get to the top end of this range and consolidate a little bit, and that's going to take, I think, probably at least all of next week, meaning that your best bet is to most likely leave the Russell 2000 alone. Things can change, they do change, but that's the way we want to look at it. And another reminder here, on the right, we have that orange is the 5-day moving average. This blue was the week-to-date volume-weighted average price. And then we have the semiconductors over here. This is the gap lower from the from DeepSeek. And, look at the daily time frame on the semiconductors. They're just a mess in here. Now, obviously, this week, NVIDIA had a great week. It just did a V reversal in here. It came down hard, and off that gap 2 weeks ago, we've seen it, running straight up here, close to a little over 20%. So it's holding above a rising 5-day moving average. In the intermediate term, it's innocent until proven guilty. And this is what we look for. This is what I pointed out last week. I said we have the potential for supply at the year-to-date anchor in the 20-day moving average. It is potential resistance. I said the same thing this week. We have potential for supply at the 50-day moving average in the anchor from the election. Potential supply does not mean resistance. It means it has the potential to be enough supply to be released to the market to overwhelm demand, to at least temporarily reach an equilibrium and turn sideways. And then after a few days, if the buyers can't regain control, then it starts to turn away. Then we can say, hey, that was resistance. Calling it resistance before it does this is an amateur way of looking at the market. We look at it and say, there's the potential. So it ran right through that potential. When we look at a stock like Tesla, what do we have here? Well, we came down to the anchored volume weighted average price off of this late August low, and we got a little bit of a bounce the last 4 days. We're still down on the week for Tesla, so don't, keep that in mind. And we're below that red 20-day moving average. We're below the anchor from the election. The anchor from the election, as I've pointed out, for the last couple months has been an important inflection point for this stock. And we were looking at the potential for a breakdown because it was becoming more recent tests of that support and those lower highs coming into it. So unless Tesla is going to do an NVIDIA and do a V bottom, which it may, you can't rule that out. But the preferred scenario is maybe it rallies up into this zone, finds supply at the year-to-date anchor, the anchor from the election, the 20-day moving average, and then as we get rid of this data, this line was 50 days ago. So by the end of next week, we'll be averaging this data out. In 2 weeks, we'll be averaging this data out, meaning that 50-day moving average is going to start to flatten out and decline and start to look like this. So ideally, what we see is maybe even just another panic low down to the anchor off of the August lows, and then I think that's highly likely that would shake people out of this thing and create a near-term bottom. There's no evidence that that's going to happen. This is just how I'm trying to teach you to think like a trader about the stock and say, looking forward, this is how you would look to say, is it going to run? If it runs into supply right in here, what's the likely scenario? Well, then we would put an anchor off of this low and say, what would that anchor look like? If we saw that that anchor, came in here and held, and then the stock created a higher low and bounced, well, then that would take this scenario off the table. The point is you want to be aware of all potential scenarios and say what's most likely. And right now, this is where I think we have the potential to go. I'm not married to any opinion. I never am. That's why I look at it and say, what if it found buyers at the anchor from this low, created a higher low, and then broke higher? Well, then I would become bullish on the stock. It's not up to me to say, hey, I'm bearish on this stock for the next 6 months. It's up to me as a good technical analyst to listen to the messages of the market, interpret it as that message changes. Just like your significant other might change their mind on certain things, you have to be able to go with the flow or feel the wrath of that. The biotechs are still just a giant mess in here. Looking to the weekly time frame, what do we see here? We see a range-bound market. The market briefly broke above that, trapped buyers, and then it's been doing nothing ever since the fourth quarter of last year. And it continues to be just a market that either you're going to be a day trader or, leave it alone. And my suggestion is leave it alone. That doesn't mean that you should do that for every stock out there in the biotech groups. There's always going to be stocks in the individual groups, but you apply the same type of logic and an analysis to those groups. To the individual stocks as you do the groups. The financials continue to be in an uptrend. They have been riding this rising 20-day moving average, and the pattern here is right now this high, and then it pulled back and made a low. It made a higher high and a higher low. So on the daily time frame, we broke out and it's holding those gains. It's behaving well. So I think that you have to look at it and say, if you're someone who's concerned about your profits evaporating in here, maybe your stop goes underneath this higher low right here, because if it broke that, maybe it would lead to a test down a little bit further. But for now, it remains innocent until proven guilty. Energy stocks, they had a pretty funky week, really. As I noted, for the week, they actually gained 2.7%. But the way they did it, was right here. It gapped up on Monday. It broke out. That breakout failed. Now it came back into this zone. It's trying to find a decent level in here. And the good news is next week, that 50-day moving average will start to flatten out by the end of the week. And then the week after that, that 50-day moving average will start to do this. This 20-day moving average is going to decline at this pace next week. So maybe we've got a week and a half, 2 weeks of kind of doing this, and then it could potentially build. But for now, I look at this and I see just a giant mess and leave it alone until it starts to set up. But if you're interested in energy names, this is where you start thinking about the scenarios and saying, what could happen to turn it bullish? I don't want to buy it just because it's up one day and I'm chasing it and they said something, bullish about it on some media somewhere. You want to look at it and say, is this structurally in a place where it can sustain a rally? So by the time this might set up, it could be breaking this little trend line here off of last year's peak and this year's peak so far. So maybe that wasn't last year's peak, but the fourth quarter's peak. So maybe it breaks that trend line in that area. The point is, for now, you're just best off leaving it alone. I often forget to talk about Bitcoin, but I remembered today. So I got out of the balance of my position this week. I told subscribers to Alpha Trends that and on X. And I told them that, I had originally I purchased, and I traded a lot. But I held a position from 62,000, sold some here on the night of the election. I sold a quarter of it. I sold some up in here. I sold some, on this failure. I actually don't even remember, but I sold the balance of it the other day. Why? Because we keep hammering away at the anchor from the election. We're stuck below the year-to-date. That's that bright red. We're stuck below the year-to-date anchor. We're stuck below the anchor from the year-to-date low. That's this day right here. That's that green anchor. We're stuck below the anchor from this high. So I'm looking at this and saying, I'm tired of owning it. Truthfully, it's done nothing in the last 2.5 months. So I want to move to cash, and I'm hoping that in Bitcoin that we see a nice shakeout in here. I've got a bid in down here, and I'd love to see it actually do this and then come back up and capture. So I've got a bid in this area, and actually at this anchor. A small piece here, bigger piece here, and then the biggest piece right there. I'd love to see it flush out. I'm not predicting that. That's what I want. The market doesn't care what I want. I'm just updating my position. You do whatever you feel is right for you. But I figure while we're below these anchors, and we could draw one off of this year's peak as well from the all-time high, that as long as we're below these anchors, then to me, I look at it and say it's neutral at best and more likely, I think, to see a shakeout. So I want to move to cash, and hopefully we get a shakeout. If not, I'll have to reevaluate my thinking here. But that's the way I'm looking at Bitcoin. As far as Ethereum goes, I got out of that over here as it broke this low right here a couple weeks ago, and I haven't touched it since. I'm sorry, that's not true. I got out of it there. I did buy some in here, sold it up in there, and then, I'm out of Ethereum. But that'll do it for me. I hope everybody enjoys the long weekend and do something fun. Have a good weekend.